Hi, I'm Brandon Poe, founder of Poe Group Advisors and creator of the Accounting Practice Academy. You are listening to the Accountant's Flight Plan podcast, where we talk about stuff in the accounting world. If you're looking to buy or sell a practice, we are the premier accounting practice intermediary firm in the industry. Check us out at PoeGroupAdvisors.com. If you're a firm owner looking to build a more profitable practice while actually reducing owner hours, sign up for our practice management workshop, which only runs a few times per year. Learn more at accountingpracticeacademy.com. Welcome to the Accountant's Flight Plan podcast. I'm honored to have our guest today, Kenji Kuramoto from Atlanta. And Kenji's got a really interesting background. He's the founder and CEO of Acuity, which builds and maintains financial functions for innovative entrepreneurs. Through Acuity, he's provided thousands of companies with a full range of financial solutions, from high-level strategic financial counsel through its fractional CFO practice all the way to virtualized bookkeeping and tax services. Acuity's been named one of Accounting Today's top firms for technology and top firms to work for. He's also the co-founder of Acuity Invests, which makes seed-level investments in accounting technology, software as a service, fintech, and crypto companies. Interesting career you got here, Kenji. Prior to Acuity, he was the CFO of an Inc. 5000 tech company and worked in the assurance practice at Arthur Andersen. He's also served as a board member or advisor for EO, which is the Entrepreneurs Organization, Staple House Restaurant, which is a subsidiary of the Giving Kitchen, Refuge Coffee, the Zero Partner Advisory Council, the Gusto Partner Advisory Council, FreshBooks Partner Advisory Council. And he's also has an accounting degree from Wake Forest University, was the Atlanta Business Chronicles 40 Under 40, a TIE Top Entrepreneur, and a HubDoc Top 50 Cloud Accountant. So that was a mouthful right there.
I'm winded just hearing that. I was wondering, is that really me? I'm not so sure.
Well, one thing it didn't say was CPA. I'm sort of reading between the lines and assuming you're a CPA. But
I am, but I'm an inactive CPA. I let it go, Brandon. And by the way, it's awesome being on here. Thanks for having me on to chat. But I'm a CPA. I'm inactive. I kind of viewed it as I used to spend lots of December 31st here in the state of Georgia. That's our deadline for CPE, cramming to get CPE done. And I was out of public practice, and I finally threw my hands up and said, I'm going to burn the bridge on this thing. What am I doing? Just cramming CPE in here at the end of the year. I'm never going back into audit or assurance. As you mentioned, that's where I started. And so, I did that. I was glad I had it for a while, but no, not anymore.
Man, I kind of admire that. I've thought about it myself because I'm in the same boat. I'm a CPA, but I don't practice. But I feel like it does help me with my writing and things, like get published in certain publications. I think that does help. That's the only reason I've kept it.
I think I think it's advantageous in many regards. When I was still a CFO doing CFO work, clients like seeing that, right? Sometimes they don't really know what it means, but they know it's important. In my role as the CEO now, I don't view it as very important at all. In fact, it's kind of a distraction trying to keep the CPE requirements up. And I'm sensitive to, again, if you're not credentialed, and I'm in an inactive status. I don't like to try to pretend that that's something that I am. I passed it. I'm glad I did. Took me a few times to get past the exam, but nope, I have not maintained it, and I don't intend to go back and reactivate it.
Yeah. I started in assurance with E&Y. That's how I started my career. And
okay.
I feel like, I've sold a lot of firms over the years. And what I've noticed is that people that come from the assurance side tend, and this is a big broad stroke here, but they tend to have a more kind of an interesting way to look at businesses, and the practices that I've seen operated by people who came out of that side tend to get into more advisory. They tend to be more controller or, CFO level type of people. Did you find that sort of, you've got an impressive career since you left public. How did that help you build your career?
Well, I think of a couple ways. The first thing I think I learned in assurance, and it took me a while. I was there at Anderson about 4 or 5 years. I definitely realized I did not enjoy assurance. And the predominant reason, I think a lot of people have this, and it spurred me to make a change, was I liked client service, but my clients didn't particularly like the service I was giving them. Not that I was a bad guy. In fact, I got a lot of compliments. They said, "Oh, you're an amiable, likable guy. You're outgoing, but you're an auditor. You're a pain in the butt." And I'll never forget that, Brandon. The best compliment I ever received from a client was, "Hey, you weren't as much of a pain in the butt as I thought you were going to be." And so that was disheartening, right? I want to be somewhere where someone on the other side of the table that I'm giving service to feels like I'm providing value. And that just always troubled me. And I'm not saying that audit and assurance is not important. I think it's more important to the public markets, to investors, to people putting money into those companies. But when you're sitting across the table from the CFO or controller or, an audit committee, and you're necessary evil. And so that was one thing. I said, I don't think I'm cut out for this. I don't like this whole playing cop kind of role. It just didn't suit me, my personality well. However, beyond the probably emotional side of that I didn't really like, that spurred me to jump out, is I think what you were referring to. That work does give you it just trains you to look at businesses, to understand how businesses work. You really couldn't do assurance work very well if you didn't quite understand what you were doing. Now, I don't know how you were in assurance, Brandon. I'm sure you were smarter than young Kenji was back in the day. I was probably in my early year or two, ticking and tying work papers and kind of following along with whatever the person had done before me. But ultimately, you need to progress into a state where you can quickly analyze a business by looking at their financial statements and understanding how they work, looking for areas of weakness, looking for areas of strength. And I do think that is a skill set that is valuable, incredibly valuable. I'll never forget a mentor telling me when I was young, it's one of the reasons I went into accounting, he kind of mentored me. And he said, accounting is the language of business. And I think it's a language of business. It's one that is very helpful. But I think if you can understand that language, that aspect of the language of business through the means of financial statements and understanding financial transactions, it can be very beneficial to you down the road, whether you go into controllership, CFO, or just advisory work, which are all things I've done since leaving public.
Yeah, I think it makes you prioritize things too, because everything's not material. You have to, okay, what's important here? What is the perspective? So I think you have to develop perspective and be good at prioritizing what you're looking at. And that is very helpful in business in general, because everything's coming at you from every different direction, and you have to be able to prioritize and focus.
You do, for sure. Sure.
So how did you get into more of the tech space? So tell me about, like, what was your first, when you left public, where did you go first? And
so when I left Anderson, it was in the middle of the first surge, the initial surge of the .coms. The bubble was building; it had not burst yet. And so this is caught right around 2000. And so things were just hot and exciting. And as a young person, that's where all the action was. That's where I didn't work on really that many tech companies when I was at Anderson. They weren't clients of mine. I was in different divisions and serving different types of clients. But I think folks, I'm in the tech space today, and some folks who missed that early tech boom, it was, I don't know where you were at that time, Brandon, but it was everywhere. Everything was tech, and the internet was brand new. And so it was a very exciting time. And I saw that, and I wanted to be part of it. I'd worked on some S1 filings and some IPOs as an auditor. And so I sat on the other side of the table. I always joke playing referee. They're doing these transactions and hooping and hollering when they file to go public. And it was fun, but again, I felt like I was not a part of the team. I was playing referee, trying to tick and tie, huge schedules together at the printer's office, right? So they could file these documents. And so I really wanted to be on the team. I wanted to be over there where I thought the action was. And so I left and went to a tech company as their controller. And it was an exciting time because things were going up and like crazy. The CFO there, great guy, still a dear friend to this day. He was more of an industry guy, had never worked in public. So me coming out of public, I was going to bring the technical side. I'd worked on deals, I'd worked on IPOs. So it was a good pairing. He taught me a lot about, again, the operational aspect of being a controller or CFO in a business. I didn't know any of that. You may remember this, Brandon. When you come out of public, you just don't have any sense of, I didn't know how to book a journal entry. I barely knew how to log into the accounting system. I knew how to do work papers. So I learned a lot of that through him. What I brought was the technical accounting aspect. And then the goal was for us to file an S1 and go public. And then by that time, the bubble had built up enough to where it burst. And then it went from, hey, how do we help this thing go to the moon, from how do we keep this thing from, cratering into the ditch? And the mission of what we were doing as the accounting function became entirely different. Now it became a goal of preservation. And during that time frame, I ended up moving into the CFO seat. Definitely a little ahead of my experience level. I was a pretty young CFO, but that's what it was called for at that time. We had to kind of downsize, and I was kind of last man standing, if you will, in the finance department. And so I got that role as CFO, and we were able to keep it out of the ditch. But I learned a lot in that time period. And that company went on to live on, and they actually just sold only a couple of years ago, so they made it through. But that's really kind of where the combination, Brandon, of my time in public plus my time through the .com space of working as a controller and CFO of a tech company really became the genesis for how I said, there may be something here to start Acuity. Knew there was something there. And so that's kind of how we got things going.
So you just jumped out on your own and said, hey, I'm hanging a shingle. And
I did. I was very fortunate. I had my wife, she was pregnant way out to here with our second kid. Not the most ideal time to do this. But I had a really good thing going at my last company. I liked the people there. I had a role that was probably beyond my level of skill set and experience. So I had a lot there, but I had always felt a calling toward entrepreneurship. And when I thought about it, I thought, and again, my wife, I'll say, she is from a family of entrepreneurs. So she was very encouraging. I don't know that most significant others are that encouraging. She was. And I told her, give me 6 months to try this out. If it doesn't work, I realized that I was like, I'll just go back and I'll have more interesting stories to tell the recruiters when I go back and find my next CFO, VP finance role, whatever. And so I used that as my back pocket, like, all right, let's start the clock on 6 months and try it. And then the original thesis was that small businesses, particularly tech companies, needed access to fractional CFOs, which today, pretty normalized. Lots of firms offer those services. Back then, it was very rare. You just didn't see it very often, people doing fractional CFO roles. People thought, oh, are you an accounting firm? Do you do taxes? I said, no. We do part-time CFO work here in Atlanta for tech companies. So it's a pretty narrow little niche. But that's what I enjoyed doing. And that's thankfully, we got some work, got hooked up to a few private equity firms who had some portfolio companies, had met some other folks in the tech space who'd said, hey, I think I'm getting ready to raise a round, or we just did raise a round. I need some help. And those became our initial clients. So yeah, that's how we got things kicked off.
Well, I like what you said about your spouse being supportive, because mine certainly was too when I went out and started my first business. And that's crucial. I see that with like people who are starting their own firms or buying a firm. It's so important to have that support. It is. Wow. So did it ramp up pretty quickly? Were you pleased with how fast you ramped up? Or was it kind of tough at first?
It did ramp up pretty quickly. I was surprised. I've used this encouragement for other people who are thinking of stepping out. And I said, I hope my experience is what they'll see. And I think it has been by and large for other firm owners starting out. It's just saying, just go out to your network and tell folks that, hey, listen, if you need any help, I have accounting skills. I'm passionate about small business and about tech companies. Can I help you? Can I work something out to help out? And I did many things in those first few days of saying like, sure, I'll tell you what, let me come out this week on my nickel. Hey, and I'll just see if I can find some things to help with. Y'all see if you like me. And if we do, then hey, maybe next week we work something up and I'll start charging you. I mean, some of it, Brandon, started just as simply as that, just to see. And the other thing I was also very lucky to have is Arthur Anderson in Atlanta was not just a member of, we're one of the big six. We were dominant in Atlanta. We were, I think if I remember right at the time, we were the size of the other five combined. So that network was big. By this time, Arthur Anderson had already blown up with Enron, right? That happened when I was at the tech company. So all of my old colleagues were scattered like the wind across all the other firms, regional, the remaining big four, or big five at that point. Lots of them had taken controller CFO gigs. So I was really fortunate to where I said, a lot of them knew, hey, Kenji's out there kind of as a hired gun right now for things. And I used to get tons of work just from old Anderson colleagues who were like, oh yeah, I just, one of my audit clients is having a huge issue. Can you jump in and help out over here? Or, hey, I'm now the CFO of this company. Can you help me on a couple of projects? So that was a big help. I got going pretty quickly, but I think that accountants should really look at, they have a stronger network than they realize. I think it's easier to go out and just try it out a bit. And at least that's what worked out for us and got us through that initial 6-month proving period of, hey, is this going to work?
Yeah, that's cool. You got all that fallout. You were fortunate. That was
I did.
Yeah.
It worked out. I mean, I didn't plan it that way, but it worked out really well. So
what were some of your challenges in scaling the business? I mean, the size it is now, you must have gone through several phases of scaling and gone through some stagnation and had to burst through. And
absolutely,
that's a pretty common experience for any entrepreneur. What advice would you give to somebody who's maybe scaling a cloud firm right now or scaling a firm rapidly? What are the challenges that growth presents, and how did you get through those periods?
It's a great question, Brandon. The one that I remember the most vividly, and it's far back there, but is getting to a point, and we used to kind of bump around between, I'd call it $1 million, $1.5 million in revenue as a firm. We probably had 10 folks or so, and there's a lot of firms who are like this today, I think 10 to 15, and everybody there is working. Everybody, including me. I was the sales guy. I was the top biller. You're doing all that. And you're just very happy the work is getting done. You do a little bit of admin work at night. You bill the clients at night, all the things you kind of do on the side of the weekends. And there's just a very natural, what we experienced was ceiling to what you could scale to when I kept myself as part of the work product. And there are a lot of reasons for doing that, because if you're looking at it in terms of just pure margin and cash flow, when you as the owner stay in that business, do that, you can really pump through a lot of, you can kind of goose up those margins, right? You can get that cash flow going because, it's my business. I'm going to be there no matter what. And so if I'm generating that revenue, sometimes that looks like it just really pumps your margins up in cash flow. So I remember, though, as great as that was, it was frustrating. We couldn't break over that $1.5 million level. And it just, I think we need some help internally, some staff internally. And we had an admin who came in and helped, but it was too hard to scale the thing without somebody paying attention to that on a full-time basis. And for me, after working in public for a long time, even the tech company I'd worked in between, it was mostly a technology services company. And Brandon, I was really fatigued by this point now of running Acuity for a few years, of stuck selling my own time. And I just kept thinking, I was a fairly young guy. I'm like, I can't do this for the rest of my life. And this is just me. Other people can feel different. I did not want to be stuck where the only math available to me around compensation was, can I work more hours? Well, that's a crappy situation. I don't want that. Or can I increase my own bill rate? And I thought, I can, but there's limits to how high you can go. And I'm not Ernst & Young. I'm not Deloitte. I can't, there's only so much elasticity. And so I told my wife again, I said, hey, I think I got to step out of the day-to-day part of the business. And she was encouraging it. Yeah, do it. I said, well, honey, let me be real clear. What that means is we're about to take a hit on my ability to generate income for the household for a while until I can get this thing through that plateau. And so she said, no, that's cool. Let's go for it. Right. We'll go lean and mean. And we did go lean and mean for a couple of years of where I had to step out when we hit that plateau, Brandon, to say, okay, I've got to run this thing like a business owner. This thing has to start working irrespective of me being the salesperson or me being the top delivery person. It's got to start doing that. And that, again, I look back now and I'm glad I did it. I'm glad I don't have to go through that again because that was painful. We invested a lot. And again, that took a lot out of my pocketbook. I could have stayed in public. I could have stayed as a CFO of a tech company. And, we really pared back the cash that I took home because we were small, but we needed to get over that threshold. So I went through that. I've tried to be encouraging to other firms because I think that's a common place that many owners get to. I think you probably see this all the time as you're helping firms sell. I think there could be a real difference between when you look at the value of an accounting firm. In many ways, you can look at it as how much cash does it produce to the founder, the owner, or also, or maybe, or what is the economic value of this firm as a whole, right? And my belief always was, the enterprise value of this firm will be greater if Kenji is less involved in it. Now, that's going to take some periods of time of investment, of me stepping out, of probably our margins taking a hit, but the economic value actually will be greater if we invest in making this thing sound and structured so that it's not dependent on me, that if I get hit by the bus or whatever happens right there, that thing's going to go down, that this thing can operate without me. So that was the big one when I think back about how do you scale through that. And I just, not everybody has to do that. I think there are days, plenty of days, Brandon, I miss the 10, 15 person firm that was pumping out 1.5 a year, really nice margins and cash flow coming through there. Things were pretty simple. And when I look at it now and we're 10 times that size, and whereas, yes, I can travel and do a lot more things that I'm not involved in, but it's a lot more complicated, a lot more complex of an organization to run. And sometimes there's some sacrifice you have to make in margin to get there. So that's where we got stuck. There've been some other points along the way we got stuck too, but that's the one I can always remember. I think about when I talk to other early stage firms.
Yeah. What was the hardest thing to let go of? What was the hardest role to really release?
I think it's the one that everyone struggles with, and that's the delivery role. I still miss serving clients sometimes. I got into this because I love client service. I don't think you can be in this work if you don't like serving clients. And there is something really special about helping somebody and helping a client. And when they turn around and they willingly give you that check, back in the day when people used to cut checks, or that payment saying, thank you for what you did. I'm happy to pay you. And they tell you that, and it's just very rewarding. I mean, it's kind of, you're getting that validation for the thing that you went out and created on your own right there. And that's really powerful, I think, for any business owner, whether you're in accounting or not. And so stepping away from that is a little tough because you always worry about, well, is the next person going to care as much as I did about the work? Now, I don't ever question rarely do I question whether the next person can do the work better. Plenty of folks can do the work better. I was probably a pretty mediocre CFO. I was okay. I was all right. Most of our team today are much better than I ever was. But you worry about, is anyone else going to care as much? And that's hard. It's hard to have an employee who's going to care as much as maybe the founder owner. And I think that was difficult to give up. I remember the first time I ran into a client who I didn't know they were a client. They came up and met me at something and said, "Oh, Kenji, great to meet you. We work, y'all at Acuity. We work with Acuity." And I about had a heart attack. It just, I mean, Brandon, I just sat there and I was like, I don't know who this person is. I don't know the name of their company. I don't know what they do. And I kind of sat there in fear, listening and looking, going, oh my gosh, I feel so embarrassed. And then he said to me, and your team is doing such a fantastic job. I'm so thankful. And then it kind of dawned on me that, oh, wait a minute. That's actually what we want. I don't have to be at the center of it, but that ego sometimes I think feels like it has to be. So that was hard to give up. It took a few times to where, to this day, when I have a team member at Acuity and I can't think of their name offhand, or a client that I don't know, I still have those feelings. But it's gotten easier over time, certainly.
So once you got over that hump and you got to the other side of it, did you find that the opportunities that sort of appeared or came your way or you sought out or all of the above were much more exciting than the previous ones that you'd been exposed to? Because that's been my experience, is like when you let go of something and you get past that and you worry like, well, gosh, what am I going to do if I don't do that? What am I going to do instead? It always shows up.
I do think it always shows up, right? I think it's, you still have moments of uncertainty of what am I supposed to do now? Or how does this work? Or gosh, I know I was a pretty good accountant. I was a pretty good CFO, but like, am I going to be a good business owner? Am I going to be a good CEO? And so there's some moments of uncertainty. But to your point, I think in every one of those, it's growth opportunity, really. That uncertainty comes with, I don't know, but every one of them have come with tremendous growth and tremendous opportunity. So I certainly have today much more responsibility today as I talk to you for many, many people, for many clients, just for our team members' families than I've ever had before, just because of the size and scale. But I will tell you that I'm much happier. I'm much more at peace about it because I've been able to continue growing. And I think that was always the thing that when I really left that last tech company, Brandon, it was a great thing, but I'd already hit the ceiling. I'd become the young CFO. The company wasn't growing that much. We kept it. We did the mission. We kept it out of the ditch. But at that point, they weren't growing much. And so I've been always fearful of not growing in my skill sets. And so I think at each of those times you step out and try something different, for me or for anybody else who's growth minded, it may take a little while. You have to make some mistakes, fall on your face, like I certainly did a few times. But there's a lot of opportunity to grow into things that you've probably never imagined. But I know I certainly have.
It's one an exciting journey, and one of the things I noticed in your bio is you've been named a top firm to work for. A lot of CPAs in public practice right now are experiencing difficulty maintaining a good staff and attracting a good staff. What are some of your thoughts on your success drivers for having a good team and creating a good place to work?
Everyone's struggling. We're not immune from that either. But I will say that we've been very fortunate that we have great team members. We have a pipeline full of candidates, which is a little bit unique in this time. For us, it started with really kind of building a firm that we wanted to work for. And I'd experienced some times in Big Four, Big Six, that there were things I liked and loved. There were things I wasn't crazy about. For me, the biggest thing was I did not like how much the accounting profession impinged upon my personal life. And for me, whatever that means to anybody, for me, that meant my family. Having a young family, I was very focused on them. And so it just felt like there was a way to have a better balance. I wasn't sure. Honestly, a lot of the folks I worked with in public, I didn't see much of a personal life. Now we'd go out and party hard and do all those things after, working with the clients. But when I saw people missing little league games with no big issue, missing birth of children, I said, this is not a place this is not for me. And so what surprised me was when we started building a firm that I would want to work at, suddenly all these people came out of the woodwork and said, well, that's what I want to do too. And I'll tell you a couple of the first things we did. We were very fortunate during COVID because we didn't miss a beat. We've been a remote first, or we say a work from anywhere firm for a long time. well before the pandemic, right? So because our team wanted to be able to go work from the beach, they wanted to travel, they wanted to, and this has been happening for a long, long time. So when we heard that feedback, we said, there's got to be a way to do it. Let's honor that. So we've been on doing that for, gosh, close to 10 years. We're also big believers in that team members not only should be able to work wherever they want, they should be able to work how much they want. The accounting profession is made up of knowledge workers. These are people who work with their brains, who are smart folks, who are conscientious folks, who care about clients. So when we tell our team, you can work as much or as little as you want. I don't know, just because somebody in the industrial era said that 40 hours is the common work week, why should that apply to us today? I mean, and again, 40 hours in the accounting profession is actually low. It's probably more like 60 is what most people experience. We've said, why should we, your employer, tell you how much you have to work? You know better than anybody what works well for you. And so we've always had that policy of, we have compensation plans that allow for people to work 10 hours a week, 20 hours a week, 50 hours a week. Some people don't even know how many hours they work because we don't track time across many areas. They have a book of clients that they serve, and hey, this feels about right to me, or hey, we're heading into the summertime and I'd like to spend more time with the kids. I'd like to offload a couple of my clients to somebody else. We allow them to do that. And I think that that's where those two things, Brandon, of allowing people to work wherever they want to work, and then also allowing people to really specify how much time they want to work, has been very helpful for us. We get back on every employee survey. Anytime we go through these awards, whether it's best place to work, what comes back as the number one thing people enjoy most about Acuity is the flexibility we provide. And I think this is an industry full of conscientious people. Accountants by their nature try to help. You don't need to, my philosophy is they do not need to be micromanaged. They need to be supported, need to be helpful, but like in there, measuring utilization, beating them up about that, and why haven't you checked in or ticked the time? That's just something we don't believe in here. And I think that's worked to our advantage to get some great folks who are ready for that kind of change in the profession.
Yeah. Well, what you're sort of at the edge of the tech transformation really that's happened over the past little while. What do you see coming? What do you see? What are you excited about, or what are you nervous about, or a little bit of both in terms of technology that's coming?
I'm never nervous about it. I always get super excited. Because I love tech and worked as a technology company CFO so many years back. I'm actually, the office I'm in today, we work in a co-working space. We're like the only non-tech company. I'm surrounded by it. So I have a very strong natural bias toward tech, and I love it. So I get excited. So what am I excited about? Historically, I think most of the technology solutions inside that we've seen emerge the past few years for accountants have really benefited more compliance practices, especially at the lower level. Like, right, we see things like QuickBooks Online or Xero that emerged. They said, okay, wait a minute, we can do this work kind of anywhere. And I think most of the tools we've seen have been helpful for, I'd call it bookkeepers, staff accountants, things like that. I'm excited about, I think there's products that are starting to emerge that are now more for the advisory folks. We're seeing better forecasting. So things that I say, all CFO work is what I tell folks should always be forward-looking, all of it. Whenever I hear someone say, well, I don't know if my person's a CFO or not, I said, tell me, are they doing anything that's not forward-looking? Because if they are, that's not CFO level work. That's controller work or something different. So I'm excited about some of the tools that are starting to emerge that allow for forecasting, better visibility, better projections into the future, scenario analysis, tools that really CFOs who've been having to kind of grind away on spreadsheets can now more quickly run different scenarios, be able to tell that story of what the financials are depicting in the business a little more clearly to a business owner. So I'm excited about dashboarding tools, forecasting tools. Also excited just about things happening in the crypto space. We have a strong bias toward that. We do a lot of work in crypto. I think it's a place where people get concerned because there's so many unknowns. I just think it represents such an awesome opportunity for accountants because it's financial data. It's another type of financial data. It's not a bank account that you're pulling data from. It's some strange intangible assets, or who knows what it is when it's an NFT and things like this. but it only points back to more need from folks like us and help with technology solutions. So starting to see people who are doing things like integrating blockchains and crypto wallets into traditional GL packages, right? I think that's interesting because now we're starting to take this, for many people, this very strange universe of things like crypto. But how are we able to help folks manage them on a balance sheet? Or what does that mean for your business? And so I think those tools are going to be very important for us in the future that help cross the chasm a little bit of things that may have traditionally been just things only on the general ledger. And I don't know what these other weird crypto things are, where those things can be viewed holistically by an entrepreneur. I also think the other place is, I get excited about too, is anything that helps improve the workflow for accounting firms. We need to make life easier for our staff and team members. And so I think workflow management solutions there that help drive manual tasks, I think non-thinking tasks out of the profession to, again, as I tell my team probably gets tired of me saying this, is don't ever forget, y'all, accounting professionals are knowledge workers. And so when we can find ways to bring technology in to remove things like paper documents, right? Or I'm literally copying and pasting something in, or heaven forbid, manually entering data, those things have to go. So I love tools that kind of eliminate that, because then it allows people to have more time to use that brain between their ears and be the great knowledge workers that we were trained up to be as accountants. And so I'd say those are the three areas I'm excited about for the future. Who knows what'll come next? It's one of the reasons why, I've been a big evangelist for out there, why I've sat on many partner advisory councils, because I love talking about and thinking about what tech can do to help us as a profession, and why we've even over the later years been investors and said, hey, not only will we share some ideas, but we've met some good folks in the space who we think are doing cool things. And so, okay, cool. Let's put a little capital behind them and see if we can help them get going. Because we certainly love the financial returns. We'd also love to see their technology come and benefit accountants and our clients.
Yeah, it's interesting. The crypto space, I feel like, is the most undeveloped or underdeveloped right now. It seems like it's just this sort of like, what is it? How's it going to take shape? Which of these things are going to make it? How's it going to be integrated with banking? And it's a lot of questions, when you
lots of questions out there. And again, I think that's typically where there's lots of questions, where there are challenges, opportunities are there. I think that's why, Brandon, you and I are entrepreneurs. It's why we're in things like EO, is because that's where innovation, occurs, is where there are challenges. When there's not a clear path, that someone's got to figure that out. I don't think there's anybody better, in my opinion, than accountants to help figure some of that stuff out. They just have to get a little creative. They can't get too trapped in the past. And so I think that represents an opportunity for us as a profession to help figure that out, because that isn't going anywhere. We're seeing that right now in other places of the world that are in financial turmoil, is that people are trying to figure out other ways to transact. And hey, when a transaction happens, accountants should be right there to help folks manage these things.
Well, I love that you've gotten into that entrepreneurial community, as have I with EO. And I would recommend any accountant that owns a firm, get involved with an entrepreneurial community in your community, because I love how their perspectives are completely different than the accountant's perspective. And I feel like being involved in that community can be really helpful for an accounting firm owner, just to understand the mindsets that entrepreneurs have, because it's a different world.
Very different world. And I love the communities of accountants that I'm part of. I'm so grateful and thankful. I talk every day to other accounting firm owners who are peers and friends of mine. They're wonderful. But I think we have to be a little careful, to your point. You could also have some communities of other business owners who just have different sets of problems, challenges, technologies they use that can also be very inspiring to you. Sometimes when we're stuck in the same profession or the same way of thinking, it's just hard to think out of the box. And so my EO group, my forum, that is, have been great. They come from a completely different types of business that I do, but I'm constantly being encouraged by them and the things they're doing in their businesses to rethink the way we're doing things as accountants. When people come to us and say, gosh, you're like the most interesting, weird, innovative accounting firm I've ever heard of, I just tell them all I'm doing is copying what other folks are doing in other industries. It's not, Kenji didn't create this. I just grabbed the way we do sales and marketing from some of our tech clients, or I learned from, someone in EO who I happen to work with about the way they do client service, right? And they're completely from a different universe. And so I just, I think it's a great point you make, Brandon. Encourage firm owners to get out there and really interact with other business owners. And maybe that's even your clients. Be inspired by them. Go get curious about the great businesses that I'm sure we work with, whether it's tax services or whether it's CAS services or whatever it might be. They're probably sitting there as your clients today that you could learn from, not just you got to go in the other direction of like, hey, let me bang out a tax return for you. So lots of places to dig in and get inspired to grow your firm.
Cool. This has been great. I got a couple more questions.
Yeah.
We'll let you wrap up. We'll let you go. Books. You read any great books lately? Anything you could recommend?
Oh, great books. Let's see. A couple of them I would say have been great. The two that come to mind most recently have been helpful for me. I'll say one more on the personal side, but is Grit. The book Grit has been around for a few years. Angela Duckworth wrote it. I'd really encourage it too for folks with kids. My kids are teenagers. I have one in college, one in high school. It is an awesome read. My wife and I have read it. We kind of read it together. It's been really formative for us thinking about what is that thing that I think all of us entrepreneurs have some level of grit, that determination that makes us get up and dust ourselves off. I think it's really interesting to see how Angela Duckworth approaches that in an analytical way, in an encouraging way of how we build grit and determination and perseverance. And I think that's been meaningful for me, and especially as a dad, thinking about how do we impart that on our kids. The other one that's been helpful for me too, Brandon, lately has been Jim Collins's newest book. Many people may have read things like Good to Great or Great by Choice. I've always been a big fan of Jim Collins as an accountant, because as I'm trying to work on my business, I still have a bias for data. And I always thought that Jim Collins and all of his books, it wasn't just kind of business self-help. I felt like he was so factually oriented and did so much research. I think accountants are naturally geared toward liking that. So I've always been a big Jim Collins fan. His newest book, which is Beyond Entrepreneurship 2.0, is a re-release, has helped me a lot. Now that we're, 150 person firm, we're growing a good bit. I have to focus on things like strategy more. And so I've used so much out of Jim Collins' book in the last 4 or 5 months to really help me develop some strategic thinking and vision for our business. And every time when I present it to, whether it's my EO forum mates or other accounting firm owners, or even internally, I always say, hey, first of all, I didn't make this up. I'm using a framework from Jim Collins, who I think is a good strategic thinker. But I developed that interest in him and his thought process because I just loved the way that he would give you insights, but is always backed up by great analytical data. So those are 2 books that may be helpful for folks out there.
Oh, those are great recommendations. Yeah. Thanks for sharing that.
Yeah.
One last question. If you could make one recommendation to someone who's starting a firm, like early in that process, what would you say? One little bit of advice that maybe you wish you'd had when you first started.
It's almost goes back to what we just talked about, Brandon, is find a community quickly. And I'll say, and not just an entrepreneurial community, something that I did not understand and appreciate when I started Acuity was how collaborative and how supportive the small business, the small firm owner community is. Again, coming out of Big 6, Big 4, there was no collaboration when I was at Arthur Andersen with the folks at KPMG or Price Waterhouse. In fact, you'd go in to win some business, and do your pitch. You knew Deloitte was walking right behind you and they were trying to kick our teeth in. We were doing the same to them all the time. It was, you fought them for market share all the time. I had that mindset coming into the small firm world, and I spent way too long trying to do it by myself. And it took me going to a conference. I remember it specifically. It was XeroCon 2015 out in Denver. I have family in Denver. Thought I'd go get some CPE when I was still doing CPE out there because it's near family. And I ran into a community of like-minded accountants. I didn't think they existed, and they were helpful to me. They weren't competitive. They weren't threatened by what I was doing. I wasn't threatened by them. They were helpful. And so those communities, I've never seen anything like it in the small accounting firm community like we have is where people want to help. And so don't do it alone. Don't just get out there and say, I got to figure this out, or I'm too embarrassed to ask for help. You will be amazed by how many firm owners out there who've been through the same things, just like me or anyone else, who will say, hey, let me help you. Let me help you on that. Because the problems we're trying to solve as firms is we're not trying to do it necessarily better than the next firm. We're trying to help these business owners. They're doing it themselves. That's who they got, an office manager, someone they found on Craigslist. They have their spouse helping them out in the evenings doing their books or things. They're not using another firm. We're trying to help them from that. And so reach out, go to a conference, whether it's a Xero, QuickBooks, find a local one somewhere nearby and meet other accounting firm owners. I wish I would have done that a lot sooner, and I would have gotten a lot further, faster, and had a lot less headaches.
Nice. No, that's great. That's a great suggestion. And yeah, I'm looking forward to XeroCon. I think it's in August this year. And
it's moved to August. I will definitely see you there. I'm sure it'll be a little warm in New Orleans, but hey, yeah, no one throws a conference or a party like New Orleans does. So that'll be fun to be there, and I'm sure we'll spend some time together. Awesome.
Well, Kenji, what's the best way for people to follow you? I know you have a podcast and you have probably on LinkedIn. What's the best way for people to?
There's a lot of ways. You certainly can reach out over things like Twitter, where it's just Kenji Kuramoto, just my spelling of my name on Twitter. Same thing on LinkedIn. I'm pretty easy to find on the socials. But I'll also thank you for mentioning our podcast. It's a podcast YouTube video series, and it's me and my co-founder Matthew. Every single Friday we film and we talk about what we're doing in our firm. We're very, very transparent about the things we do in our firm. So if you'd like to, as we say, it's a happy hour conversation. We do it every time with beers. He and I are both lovers of beer. We have a beer at the end of the week, and we talk about the really weird, crazy things we're doing at Acuity. So we're speaking directly to other firm owners, just shared ideas and things we're doing. So feel free to check those out. Listen to the weird, wacky stuff we're doing. We just had a few episodes where we bought things like NFTs just before the show. We tried to show how to do the accounting for them live there while having a beer. So we get into pretty wacky, zany things, but feel free to reach out and, check us out there.
Awesome.
That's called Drink While You Think. If you just type in Drink While You Think into YouTube, that's the name of the show, and you'll probably find it.
Love it. Awesome. Well, Kenji, thank you so much for being a guest on Accountant's Flight Plan podcast. And we appreciate your time, and I'll see you in August, I guess, at XeroCon.
Absolutely. Thanks for having me on, Brandon.
Thanks for listening to the Accountant's Flight Plan podcast. If you like what you heard today, please follow us so that you can get updates when new episodes are released, and share our podcast with your friends and colleagues. You can also follow Poe Group Advisors on social media. Please visit our website for more information at pogroupadvisors.com.